Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we've had 33 weeks of accurate market forecasting. That's 33 weeks in a row where I've been 100% accurate in my market forecast. And I'm actually relieved to say that my forecast from last week did not come out as I thought it would. The pressure is off and I get to start all over again. And I know that sounds crazy, but if you've ever played baseball and you had a winning streak or a batting streak, you know that there's a lot of pressure, and the pressure is off of me right now. But what I like to do is go into the charts. I'll dig in real deep here and give you my forecast for next week. Chances are they will be accurate like I have been all year long. This is the Dow Jones Industrial Average ETF, ticker symbol DIA. And I left my lines on the chart from last week, and you can see that my forecast was that we would pull back and go lower. We stalled up here this week with the Dow, and interestingly enough, I did say that we would see a drop in volume, so that part of the forecast came true, but the price action is just kind of hovering up here with nowhere to go, actually. The drop in volume is a signal that the buyers are getting tired. So what I'm going to do is erase my lines from last week, and I'm going to redraw my lines. I'm basically just going to extend this over to the right. I think we will pull back here because of this drop in volume. See that right there? We might even see another drop in volume on Monday, as we have a shortened trading week next week for the Thanksgiving holiday. Now that's the diamonds. We have a gap down here, which would be my target fill price eventually. Gaps fill about 80 to 85% of the time, especially for the diamonds. And so I'm going to leave that in place as a key support level. If we look at the Russell 2000, boy, I had that one wrong for sure. The markets continued to go higher. But the good news for those who are looking for a pivot point, especially the option traders who are looking for a pullback, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 up days in a row. We're long overdue for a red candle. This is called the stale green light. And plus, we have an almost vertical upward trend here that is not sustainable. So I'm going to forecast that we're going to pull back just as hard as we went up, and you'll see that we'll probably come down to this key roll reversal support level right there. That former resistance, once broken, now becomes support, and I'm going to put that as my target. If you look at the Qs, QQQ, this is a NASDAQ ETF. Again, market went opposite. We had a bearish engulfing pattern on Monday. This was a head fake right here. Bearish engulfing patterns are accurate about 80% of the time. This is one of the 20%ers that did not follow through. This is more or less a failed bearish engulfing patterns. So we came fairly close to my support level on Monday. That was my target. So I can't say I'm completely wrong on the forecast, but this did not come all the way down like I thought it would. So I'm going to erase these lines right here, and I want to point out to you the drop in volume. When you see a drop in volume like this on a vertical or almost vertical move in a trend, that tells us that the buyers are getting tired, they're running out of buying power. And plus, we have a resistance point here that I think we're going to pull back from. So this is my forecast for next week. Now remember, we have a shortened trading week next week, so we might have some volatility as people try to jam in all their trades in the shortened trading week, but this is my forecast for the Qs. If you look at the spiders, ticker symbol SPY, again, this is like the Dow. It's kind of stalled. I was accurate on the drop in volume. That's usually a signal that the buyers are getting tired. So I'm going to keep this as a key target support level. I'm going to draw this as a resistance point, and then I'm going to forecast that we're going to pull back here next week. So that's my forecast for the spiders. Now, this coming Monday, we have an open house Q&A. If you go to the marketguys.com. That's our website right there. And you can scroll down just a little bit and you'll see that there's a link here that will bring you to a registration page. All you have to do is click on that link, put in your information. We mainly need your email address so we can send you the reminder. And it's as easy as that. It's a free event. Feel free to share that with your friends and family. We have an action-packed hour of stock analysis and question answering. And this is the most fun that I have during the course of the month because the open house usually follows options expiration day, which was today. And so we're going to have a good group of people asking questions and submitting their stocks. There's a good chance you're going to get a good trading candidate or two from the audience. It never fails. We go through the list and we find some really good stocks. So I'm looking forward to speaking with you on Monday. Again, just go to the registration link, go there, put in your info, and we'll talk to you on Monday. Have a great weekend, folks. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.